I've been asked today probably a half dozen times on the show floor by investors about the royalty business specifically. So yes, you came from the production side, right? You came back to the game, now you run Gold Royalty Company. So first of all, you didn't have to go back to work, you decided, right? You obviously got inspired by this project. But if you could spend another minute on why, when you decided to come back to the game, you decided to go royalty instead of production, which had worked so well for you in the past.
Yeah, because you know what, as I said, the juniors have not had access to capital for a dozen years. And in the biggest vehicles I ran and was involved with, we never did our own grassroots exploration. We effectively outsourced it to the juniors. Well, when the juniors don't have access to capital, what you have is a shrinking pie to deal with. So you have declining reserves, declining production profiles, and all you can do is basically take over other companies, which is a zero-sum game in the best of times. There are no synergies in our business. That's a fallacy. There are some examples, you know, in Nevada when VRIC and Newmont joint ventured their projects, that was a real synergy event, but there are very few of those. There are very few of those that are available in the sector right now. So I don't think M&A is going to add value. And I think diversification within an operating company is very, very difficult to achieve. There's a limit to what you can do. I ran a dozen operations with 20,000 employees. I was actually looking to shed assets. It was too many operations and employees to manage, practically. There's no limit to the diversification you can achieve in a royalty company. We have 250 royalties. We could have 2,500 royalties. I wouldn't have to add another employee.
Quick break here. This episode is brought to you by West Red Lake Gold Mines. Now, if you know nothing about West Red Lake Gold Mines, let me tell you one thing. This company was founded on the back of a transaction where they purchased the Madsen mine in northwestern Ontario in an area called the Red Lake Gold District, which to date has produced around 30 million ounces of gold from some of the richest gold deposits in the world. Now, what they paid for this mine versus what they got has led legendary mining entrepreneur Frank Giustra to call this transaction the deal of the decade. And Bob Moriarty, founder of 321 Gold, was recently on my show calling West Red Lake Gold Mines one of the two most undervalued gold companies in Canada. If you're curious why these individuals are so excited about West Red Lake Gold Mines, hit the link below to learn more. Now back to the episode.
Now, Evie, you've been an advocate from the investor side for royalty companies ever since I met you. So can you walk my audience through that angle? What is the appeal, if you're the capital allocator, the retail investor, about the royalty business?
Well, I don't want to put a wet blanket on it, but there's theory and then there's reality. I mean, the theory is that, you know, Pierre, the guys came in and did this $2 million deal, you know, Gold Strike, and you pulled $1 billion out of there, you know, over 30 years or something like that. That's the theory, is that you get this perpetual non-dilutive carried interest in an asset with no capital invested over time. And all that is very true. I think the opportunity right now with the royalty business, there's been about 10 acquisitions in the business, as Dave knows, and a lot of consolidation. There's kind of like too many royalty companies a few years ago, and one of the things that the companies all missed was that when interest rates go from 0 to 5.5, the value of these royalties changes that are long dated. You know, you have like these, you know, 20 years, you know, you're doing cash flows 20 years out, and you have to value that, and the value of that changes. So now you're in this position where the companies are quite cheap. I mean, the companies that have remained were the strongest of the bunch, strongest puppies in the litter, right? They're under $1 billion. I mean, there was a lot of companies that got bought and combined with each other, and they weren't necessarily winning mergers. They were just kind of fall into each other to make more sense. And so when you buy a royalty company, you want broad exposure to assets in a good jurisdiction, because that free carried interest, you know, perpetual, non-dilutable free carried interest in a mineral claim, that's what you want to be looking for. And so you want to cast that net as broadly as possible. But you have to look at reality in the stocks. I mean, what's happened is that those stocks have been severely discounted, you know, in the macro environment. It's not really necessarily been because of mistakes made on one asset or two assets. It's been kind of across the board knocking them down. And so now you're in this position where if the Fed turns next year, if the gold price moves to new highs, you really have to ask yourself, who's got the best china in the cabinet, because that's what we want to buy right now. And that's, you know, if that's the position that we're in, I mean, you know, the larger royalty companies haven't really largely bought growth it's kind of like there's a gap for the bigger royalty companies. I mean, they've run into a problem. Like Franco has a bit of a problem, right? So they had this amazing initial royalty that they started the company with. It's like what David was talking about. It's this magical royalty that you get, and then boom, the cash flow expands. But now it's too big. So they have a giant amount of cash flow, and they have to redeploy it. And they can't really redeploy it doing exactly the same thing they did to get to the dance. So it's this big, wonderful company, but it's like the smaller companies typically, with one win, a smaller company can do something that a bigger company can't do just because of size. And so that's what's interesting at this moment. But one quick thing get back to the price of gold, like we were talking about. I want people to understand the U.S. stock market's worth $50 trillion. And if people in their portfolio, if they had, say 3% allocation to gold, hypothetically, that's more demand than the gold market could even fulfill. And so I think when people start thinking about this, changing the narrative, like you were talking about, if people decided, I'm not sure I'm comfortable with all these meme stocks and AI chip names and all this stuff that I've been buying, it kind of feeds itself higher and higher and higher. And if people said, maybe I do want 3% of my money in gold or something, it's an undeliverable amount of investment for the business. I mean, it's an estimate, but we don't think we could find $1 trillion, to deliver like quickly. There's only like 13, 14 trillion or something. Ronnie would know better than me. By the way, there's rumor that we're related, and I tell people that we're secretly related, and we're gonna, we have like a cabal, we'll take over the gold industry. But anyway.
But I'll ask my mom.
Yeah, let me know what she says, because I'm nervous to ask. But yeah, we got that earlier today. We had an accusation that we were, and I said, yes, a secret plot to take over the gold industry, which is shrinking, so it's going to be easier and easier to take it over. Yeah.
But going back to that point too, on the retail environment wanting to buy gold, I think there's been a lack of knowledge on even how to do that in the past. And I recently read an article, of all places, Costco now selling gold. Yeah. And the reality is they can't keep it in stock. Yeah. So there is a demand for it. I'm not sure the channels are there to get people. If they wanted to have a backup in their portfolio, 1%, 2%, 3%, it's a great idea. But also the narrative has got quite complicated. People are hearing about countries they've never heard of before. Sustainability is top of mind. What's happening in these other places? Get back to the basics. Simple projects in the Americas, good stable jurisdictions, simple narrative so people can actually understand what they're investing in. I think we'll go a long way.